You've been learning about value investing, finance, just regular investment for a while now, but you don't know where to go next. You're getting confused about the vast amount of information on the internet. You don't want to waste your time on crap information. You want good information and reliable information. In this series of videos on value investing and finance education, you will find those answers to those questions and much more. My name is Jason Rivera. Welcome to Value Investing and Finance Education. Hey, Jason here. It's been a little while since we've talked. I apologize for that, but it was for good reason. One is me and my wife took our first vacation. We've been together for 16 years. In June 2019, we're our high school sweethearts. We've never taken a vacation. So we took a vacation to Spain, planned it for 2 years, went to Madrid, Spain, which was amazing. And then I went to Dubai on a business trip. That's what I want to talk about today. I want to give you my thoughts on the importance of capital allocation. What capital allocation is, the importance of it, what I was doing in Dubai, all these kind of things. So, the morning, actually let me back up even further. Last October, November, again, October or November of 2018, if you're watching this in a year that's different from 2019. Me and one of my students in the Value Investing Journey Masterclass, he works in the UAE. He's a student of mine. We were talking about, I don't remember exactly what we were talking about, but we were essentially talking about how businesses don't necessarily always know what they're doing. Business owners don't always know what they're doing with their capital, if they're investing it well, if they're investing in the things they should be investing in, if they're investing, what their returns are, if they are investing, anything like this. When we somehow got on the subject of some of his clients in the UAE and how they could use this kind of knowledge, I said, yeah, I mean, pretty much, unless they're billionaires at the billionaire level, pretty much every business in the world can use help with capital allocation, because again, almost no one in the world knows what capital allocation is, or how to do it well, or how to do it properly, or how to, again, even measure their returns. So we started a business, and I got flown over. Got flown over by one of the companies to advise them, or begin advising them on things. I presented to them. Went back and forth on ideas, looked over their financial statements, in-depth financial statements analysis, got a verbal handshake agreement with one, and got a "we'll get back to you" answer from the other one, and then they just got back to yesterday and said they want to go forward with me as well, not only in terms of helping them grow the company, but selling the company as well. So before we get to that, though, what is capital allocation? Capital allocation is, to me, my definition of proper capital allocation is using your investment capital, whether it's free cash flow, operating profit, equity, debt, whatever it is, to invest in the highest, best return, safest return assets. Again, whether it's private company stocks, whether it's private companies, whether it's public company stocks, whether it's real estate like apartment complexes, whether it's investing in marketing in your own operations, whether it's training your own people, whatever the case may be, you have to figure out what the highest and best use return you're going to get is from your capital and your time and your opportunity costs, all that kind of stuff. So it's a very, very complex subject, and you have to have the proper mindset to do it. If you know how to do it, you have to have the proper mindset to do it. It's like value investing. If you have a trader's mindset, you're going to be a tailor value investor, even if you know how to do all the specific steps. Same thing about capital allocation, except most people, most business owners, most CEOs, most CFOs know nothing about capital allocation. This comes directly from Warren Buffett. He said in his career, he's seen only a handful of people he would consider great capital allocators. And he's been in business for 50 years, probably seen tens of thousands of companies. In the book The Outsiders, which focuses on great capital allocators. I don't remember their exact definitions, but they beat Jack Welch's returns over a certain time period. And not only did these people, I think there's 7 in the book. Again, they evaluate thousands of people, thousands of companies. They only found 7 in the entire Outsiders book that fit their criteria of great capital allocators. Why is this though? This is because most, again, CEOs, CFOs, business owners, entrepreneurs, they got in the business to help other people, to make money, to guide the company from a kind of operation standpoint, not necessarily from a strategic capital allocation standpoint. They're 2 completely different mindsets. One focuses on the highest, best return investments you can make, again, based not only on the internal operations of your company, potential outside operations, selling assets, buying assets, all these things. Most people don't even know how to value things, let alone figure out which area they should be investing in. And again, it's not anything bad necessarily. It's just how it is. Most people in these kind of positions came from marketing, operations, finance, if they're CEOs and CFOs, marketing, sales, operations, finance, these kind of arenas. You don't deal with capital allocation decisions like that when you're in those positions. And even if you have been in those positions for a while, let's say you're a CEO or CFO for a while, you don't generally look at what should I be doing from a grand strategic perspective. Should I even be in this line of business? People just keep doing what they're doing generally, unless some kind of crisis happens, and then they correct course, and hopefully they hope they're doing what's in the best interest of their company. But again, even if they do that, that's not capital allocation, because you're not measuring what the returns are. You're not thinking, should I even be doing this? Should I be investing in operations and marketing? Should I be looking at expanding to another geographic region? Should I look at expanding to another product line? Should I look at, and what should my expected returns be from these operations? Am I even profitable? Are my products even profitable? Are my services even profitable? Is my sales and marketing team profitable? Are they doing a good job or not? What's the return on our marketing dollars? What's the return on our sales team? What's the return on our training we're doing for our people? So these, again, I've studied these kinds of concepts. Other than value investing, which I've studied the most of over the last 12 plus years, capital allocation and investment flow are probably number 2 on that list of things I've studied most over the last 12 plus years. So I have an enormous amount of knowledge here, and I have the proper mindset because I'm very long-term oriented, and I know how, more importantly, at least in terms of the initial stages, I know how to value and evaluate things all the way up from entire businesses down to individual product lines, service segments, whatever, marketing segments, whatever you want to look at. So that's capital allocation in a nutshell, and why most people aren't good at it. Again, pretty much unless they're billionaires, most people aren't good at capital allocation. They probably don't even know anything about capital allocation. They don't know how to look at their returns. They don't know how to calculate their returns. They don't know how to look at their financial statements from a non-accounting, real-world perspective. And I've talked to several business owners over the last year, over the last 6 months, as I've been trying to, or working to get this going more, and help more clients and help more companies. Most people, business owners, have never even seen a cash flow statement. Most look only at the P&L statement, which is essentially the income statement. I don't look at the income statement really at all. I look at the balance sheet and the cash flow statement almost 100%. Probably put 5% effort into looking at the P&L statement. And that's, again, mainly on the expense sides to see where we can cut expenses type of thing. Most companies, again, most business owners have never seen, I'm not sure why this is continuing, it's on autofocus, but I don't know why it keeps going in and out. Most business owners, again, this goes up to multi-million dollar, $10+ million companies that I've been talking with, never seen a cash flow statement. if they have. They don't know how to parse through it and to see if they're actually profitable in a real world sense. They don't know where the value of their company is. If it's all in inventory and property, plant, and equipment, do they actually have retained earnings that they can use at the end of the year, retained earnings or free cash flow they can use at the end of the year to invest in the business? Should they be investing in the business? Should they be investing in marketing, operation? Should they be looking at potential acquisition? Should they be looking at selling off an unprofitable part of the business? Is part of their business unprofitable? They don't know. A perfect example, and this is a public Australian company I was looking at with one of my couple of my students, was this company, and again, I'm not going to name the name because I'm probably going to do a case study on it at some point because it was so interesting. It's a holding company that has 3 different operations: a manufacturing operation, which is kind of its legacy business that it's been running, I think, for 50 plus years. Its investment business, which invests in real estate assets, stuff like that, and a developer which develops those assets. Essentially, the way I explained, again, I'll do a case study on this probably at some point, but the way I explained it to my students was to make things as simple as possible, because again, that's what I like to do in every aspect of things. From their investment / development side of business things, they were earning, by my estimates, 15 to 20% returns, which is fantastic. That's great. They're producing a lot of free cash flow that they could use to invest elsewhere. They low asset business because they were developing the land and then selling it or something. I don't remember, but they weren't actually doing construction work themselves on the land. I don't think. They were mainly had cash flow producing apartment buildings, complexes, office buildings, that kind of stuff. So low expenses, generally low expenses, high returns, high free cash flow production, but they were taking that cash flow that they were, again, earning 15 and 20%, and they were taking it and putting it in their legacy manufacturing business that was only earning 5% returns about. So the way I explain it to my students is they were doing the exact opposite of what you're supposed to do with proper capital allocation. They were doing capital misallocation. Essentially, they were taking 15%, earning 15% returns on their cash flow. They were earning about 15% returns in the one side of the business, taking that cash flow and putting in the 5% cash flow business. So they are essentially destroying automatically, as soon as they move the money, about 10 percentage points worth of their cash flow. And I hope that makes sense, because it's an incredibly important point. They were taking their operating profit and free cash flow from a low ongoing expense, low ongoing cash flow producing, high cash flow producing business, and putting it into a high cost, low margin, high ongoing expenses business. So again, to reiterate this point, they were essentially taking, just think about it like a investment. They were taking their money they were earning from their 15% cash flow business, their great business, putting in their 5% business, just because it was a legacy business, and they were destroying capital pretty much immediately. Which again, not only are they destroying capital, every time they do that, they're destroying 10% of the worth of the free cash flow in the company that the company could use to grow and invest in other great return assets. They are wasting, they're destroying shareholder value because of this. They're destroying their opportunity costs because, again, they're essentially just destroying 10% of the value automatically instead of being able to invest that in higher return assets. And again, this is a public company. I think it's been around for 50 plus years in Australia, and it's I'm thinking it was around $1 billion company, slightly under, maybe a few $100 million. So this is a big company. This is a pretty big company, and they are doing the exact opposite of what you're supposed to do with proper capital allocation. Again, probably because that's their legacy business that they're reinvesting the capital in. They've probably always done that. They're probably always going to continue to do that. They probably have no idea that they're even doing that. They probably don't know what the returns from each of their businesses are, so they probably don't have any idea that what they're doing is actually happening. And again, this is all from public company financials. I've never visited this company. I've never talked with anybody at the company. This is just from their financial statements. So this is what I'm helping these companies in Dubai with. That's why I was over in Dubai. I was advising them on this kind of stuff, where they can cut costs, if they can cut costs, and then where they can grow from their current operations, and then where we can help them expand to increase the value, not only the value of their company, but increase their cash flow production and operating profits, so we then can use that money to reinvest in other assets that are earning a high return, which will increase more free cash flow, more operating profit, and will snowball from there. Again, positive leverage here is what I'm talking about, positive leverage. Again, this is a pretty complex subject, but hopefully I'm making it I'm trying to make it as simple as I can. Hopefully it's easily understood. If it's not, let me know in the comments below if you have any questions. But this is one of the most important things, and I just saw a stat yesterday. Again, I know enormous about this kind of stuff, and I don't talk about it much because every time I do, actually I just don't bring it up very often just because I haven't. I always talk about value investing and stuff like that for the most part. I'm going to be talking about this more and more as I help more and more companies with this, because as you know, I'm always learning, always improving, always getting better, even though I already have enormous knowledge in this area. But this is the kind of ultimate point I want to get across when it comes to capital allocation and how important it is. Not only not destroying capital, not only increasing the value of your company, not only increasing the cash flow of your company, all these kind of things that are great. I saw a stat just yesterday, I was reading it, that great capital allocators increase the value of their company by about 20 times over the long haul. Not 20%, 20 times. So again, this is an incredibly valuable skill set that requires a specific mindset, requires a skill set of being able to value and evaluate things on a macro level and both a micro level, from a company-wide perspective all the way down to individual product segments. And luckily enough, I was able to go over to Dubai and help some of these companies, and I'm going to continue to help them and other clients like this. But I want to talk to you a little bit about capital allocation because it's enormously important and almost no one talks about it. I just did a Google search or an Amazon search yesterday on capital allocation books. Essentially 2 came up. I've read one, The Outsiders, and the other one was called Rebel Allocator, I think, and I'm getting that in the mail to learn. This concept is so important. I'm going to be talking about it more and more, of course, as I'm helping more. Sorry about that. My wife continued to message me about something, so it cut off the end of the last video, so I had to make this. So what I was talking about at the end of the video was the books I found and stuff like that about capital allocation. Essentially, there's only 2: Rebel Allocator, which I'm getting in the mail, I haven't read yet, and The Outsiders, which only, again, names 7 great capital allocators that they found out of evaluating thousands of companies. So I'm going to be talking about this more. If you want me to talk about this kind of stuff more, or anything in particular, let me know. The more you guys talk about, ask questions, whatever, about capital allocation, the more I will talk about it. And again, if you have any questions, please let me know. I answer all questions myself. This is some super high level stuff, and I tried to make it as simple and understandable as I could. So if you don't understand anything, let me know. Because again, and I'm not sure if this got cut off or not, but if it didn't, or if it did get cut off, great capital allocators can increase their company returns by 20 times, not 20%, 20 times over the time period they're with the company. So this is an ultra powerful set of knowledge and skills, I guess the best way to put it, that frankly almost no one knows about, even in the value investing arena. If they've heard of capital allocation, they don't know how to value it properly, or value the specific areas properly. If they know how to do that, they don't know how to allocate the capital unemotionally and logically like you should be doing. I'm going to be talking about this more since I'm helping companies with this, or because I'm helping more companies with this kind of thing as well. But if you want me to talk specifically about about specific questions, anything you have, getting more messages, sorry about that, let me know. And again, I answer all comments, questions myself. Make sure to like, love, share, comment on social media, YouTube, wherever you're watching. And again, if you have any questions, let me know. This is super important stuff that almost no one knows about. And if you know about this kind of stuff, you can gain a huge advantage over other people. Other investors, you can help companies potentially, like I'm doing. Whatever the case may be, you can help your own investments by spotting great capital allocators, by being able to spot great capital allocators. And frankly, there's, just in my experience, and I've evaluated thousands of companies over the years, not very many. So if you can spot those people, great advantage over other people. What else did I talk about at the end of the last video? Again, sorry about that. My wife was messaging me about something. I think that's it. I hope I didn't miss anything that got cut off from the last video. Again, thanks for watching, and I'll talk to you soon. Maybe if you're interested in Dubai, let me know. If you're interested in Madrid, let me know. Wonderful countries, wonderful cities. But yeah, if you're interested in anything, let me know, and I'll answer questions. Until next time, I'll talk to you again soon. Have a great day. Bye.